Writing in World Finance recently, Nick Bang, the CEO of online broker Liquid Markets, said there are too many competitors in the forex market and that it is one of the most stressful industries to be involved in. He joins me now to discuss the broker space. Nick, welcome.
Thank you very much, Nick.
The number of forex brokers has risen sharply in the last few years. Tell us about your involvement with the market.
Okay, well, I've been involved in foreign exchange trading for many years now. I started my career in the mid-90s trading FX and futures. Of course, back then, all the trading was done by telephone and not via the internet. But having been a relatively young man back then, I think I saw the potential in online FX trading, so got heavily involved in that business. You may know a company called ACM, Advanced Currency Markets. This is a company that I created with my partners back in 2001, and a company that was rather successful and in its time was one of the largest online FX traders, FX brokers. I recently sold my involvement in that company and left that company a couple of years ago, and basically was approached by the shareholders of Liquid Markets, who asked me to come down and become CEO of that company, which I readily accepted. Now, essentially, after a period of restructuring, we are growing the company and expanding into other markets and other products.
How are the more successful brokers gaining market share and growing their client base?
Clearly, over the last, I'd say, 12, 15 years, you've had an awful lot of growth in online FX trading. So you've had some companies that started out back then that have grown a very large client base and have created a big business. And of course, what you see today is that you see the FX market, I believe, in Western Europe mainly, has come to a bit of a plateau in terms of growth. So, still there's a lot of currency traders that are still interested in the product and are trading currency. But as time goes by, I see that you have different places where there's more growth, like, for example, Eastern Europe and Asia. I think a lot of these brokers now are looking towards the Asian markets where they know there's still a lot of growth and going towards there. I think also they're looking at CFDs as an instrument that can be added onto their platform as well. So they are also moving into CFDs, not only foreign exchange.
CFDs being one of the products that you offer. Tell us more about your services in general at Liquid Markets.
Well, we are primarily an online FX trading company. So we offer two online trading platforms. One platform is called MT4, the other is called CTrader. And clients can basically log into the platform, open a trading account, send over some trading collateral to the company, and they can trade primarily foreign exchange. We focus on offering FX with very, very tight spreads, but spreads is not the only thing which is important. It's also the quality execution which is behind the tight spreads as well. Also, we offer CFDs as well, and CFDs is a very interesting product because essentially you can CFD pretty much any financial instrument, like, for example, stocks and ETFs and commodities and the continuous futures on indices. So I think we have a pretty wide offering, and really the focus of the company is to offer tight spreads and quality execution.
So competitive spreads are attractive to the retail investor, of course. So is leverage, but there is caution to be advised there.
Of course there is. The choices that we offer our clients are driven by customer demand. So clients need leverage, they ask for leverage, so obviously we provide it to them. But I think that we do go out of our way to explain to customers that leverage can basically be quite a negative thing as well if it's not used properly. I think a lot of novice traders are attracted by the kind of gains that can be generated trading FX and CFDs on the basis of high leverage. But I think that one has to be very, very careful how you use it. For example, when you have a high frequency strategy where your holding period, the holding period of your open position is very small, you can afford to use more leverage. But if you're trading on the basis of a more long-term strategy, then obviously your leverage has to be tempered quite a lot. So I think that a lot of traders don't really realize how potentially destabilizing it can be to use very high leverage. And of course, we try and educate our customers as much as we can around that.
Some interesting movements in the market at the moment. Which currency pairs in particular are you interested in at the moment?
There's a lot going on in the market. We've seen clearly the situation with the EU bailout in Southern Europe, Cyprus, and so on. So I think that there's a very, very big focus, obviously, in the major currency pairs such as euro-dollar. A lot of activity there, a lot of volatility there. So obviously, I think for clients that have a volatility-based strategy, which a lot of clients do, I think it can be a very interesting market to focus on the majors right now. Of course, from a commercial standpoint, there's a lot of other things going on as well. Today, you have a situation whereby a lot of exotic currency pairs like the Eastern European pairs or other pairs around the world are also interesting to customers because essentially they have the choice of being able to enter those pairs, and not only are the spreads tighter than they used to be, but also they have the possibility of having a higher interest rate yield on overnight swaps, right? So there's a lot of carry strategies around those as well. And then, of course, let's say from a strategic standpoint, you have what's going on in China with the renminbi. I think that's quite an interesting development there, and I think we're going to see quite soon, let's say, a sort of a third front, so to speak, of a currency that is going to probably be able to be rivaling the dollar and the euro going forward. So I think that's going to be an interesting development to be looking forward to.
So finally, what are your plans for growth over the next 12 months?
I think we have some pretty ambitious plans for growth. Clearly, the company is interested in growing into emerging markets, as I mentioned before. We have a presence in Eastern Europe. We want to grow that presence. It's quite an important market to us. We believe there's continued growth there. Obviously, Asian markets is something that we're looking at as well. And I think particularly South America is quite interesting. We've set up an office in Portugal, actually, not long ago. We're looking to establish an office in Spain as well. And essentially, those offices not only are going to be exploiting the local markets, but also can serve as a staging ground, let's say, towards our entry into South America and Latin American markets, where I believe personally that there's going to be a lot of growth in the future in online FX. So those are part of the plans. On the product side, you see that the company not only is interested in execution, obviously this is our core business, but we are looking to go towards also social mirror trading. I don't know if you've heard of that development. That is something which is gaining much more popularity today with a lot of traders that maybe don't necessarily have themselves the time to be able to trade the markets and want to go and choose other traders that have been able to show very, let's say, positive results on these platforms. So this is a business that Liquid Markets is trying to get in, which implies that we need to set up our own social trading platform and offer that to our clients. I think this is quite an important development because I see the market shifting a little bit from the self-trading client towards social mirror trading. So we're very excited about this, and that's something that we're going to be getting into very, very soon.
Nick, thank you very much.
Thank you for having me.